Good morning, good afternoon, good evening, folks. Michael Zuber, one rental at a time, back with the one and only Mr. Greg Dickerson. How you doing, sir?
Doing great, Michael. Good to see you.
Nice to see you as well, man. One of the things I want to talk about is I think we have some severe pain in front of us. Obviously, the CPI number came out on Friday, which peak inflation narrative is dead. Kathy Wood's July pivot dead. September pause dead. Now we have people talking about a potential Fed rug pull with maybe a 75 or 100 basis point move on Monday. I don't know where you stand on that. But in short, the Fed is not your friend. The Fed put is dead and the Fed is behind. So more pain ahead. What do you think of all that?
Yeah. I never understood. We've talked about it multiple times where this narrative of, inflation has peaked and all that. I mean, that's academics, economists, government officials, nobody in the real world that's out there that has to make a living was talking about inflation peaking or coming down anytime soon. And then the talk of the Fed pausing or, pivoting or doing whatever, that was just hopium. That was just people that are down so bad that they're pleading for the Fed to do that. And they're trying to push this narrative out there thinking they're going to convince the Fed of something. Now, Powell is an interesting bird, right? And the Fed is an interesting dynamic. They've got a real problem now because inflation is they already lost credibility. Now they're just like, we got a bunch of clowns running things. At this point, the credibility, that's out the window. They have zero credibility. So in order to try to regain something, they've got to take serious action. So, the Fed is trying to, manage this and navigate this softish landing. And I coined a new term last week calling what Powell has to be is dovishly hawkish to land things softish, right? So, what he has to do is he has to come out and say dovishly hawkishly, he's got a jack 75 to 100, but then say, we're going to monitor, we're going to watch. And that's what the market's pricing in right now. The market is pricing in that 75 to 100 basis point, reaction.
As of this morning.
Yeah. And like I referenced in the last video, you have to understand the Fed still hasn't done anything yet.
No, they're at like 0.75.
They still haven't really started rolling off the balance sheet. What they stopped was the purchasing. They haven't really sold yet. Yeah. So you have QT yet to come. You have real interest rate hikes yet to come. They don't have time now to go 50 points at a time.
No,
I think they need to come out to regain any kind of just whatever's potential steps back towards some credibility and saying, look, we got it way wrong. We missed it because of this reason. We have to react. We have to react strong and go 50 or go 75, 100. If they do that, the markets will bounce. If they don't, and they only go like 50 or something, you might see, severe reaction in the markets, to continue to, because to continue to deny what's going on will do more damage than any sell-off in the market could ever do.
Yeah, I agree with all of that. One of the things that, again, I got a Wall Street guy that I bring on every Monday in a couple hours. He's been talking about for weeks about the Fed chasing the 2-year note, right? They're chasing the 2-year, and then all of a sudden you look the last 48 business hours, the 2-year notes exploded. That's what I was looking up over here. It's now at basically 3.25, and the Fed's at 0.75. So they're 2.5 points behind now. So I'm going to push him to say the Fed really's got to go 100 and then communicate they're willing to do it again. I mean,
the problem is there's no backbone at the Fed. Powell, he's weak. He's very weak. I mean, they're ignoring, real numbers. I don't know where they're getting their information. It makes zero sense.
Yeah.
And you've got Biden telling him behind closed doors, dude, you better tighten up. He's saying, we're not going to mess with the Fed. We're going to let them do their work. Then when the door closes, you better tighten up because, this is real. People are changing their behavior. They're feeling this, at the real level of the consumer, everything. And we're sitting here going, when they were all saying inflation is, peak and it's going to start coming down this summer, I'm like, you got to be kidding me.
You go to the grocery store? What the hell?
Yeah. Stuff goes up in the summer, right? Food, because everybody's cooking out, gas, travel, everything spikes in the summer. And, it's just like these guys are in complete denial. And, the next inflation print. So we just saw May. May was high. June's going to be even higher. July's going to be higher than that. I mean, you're not going to see inflation peak if we're lucky till the end of the summer going into the fall. Then you've got energy that's going to start hitting the colder parts of the country that have to use heating oil, things like that. So this whole inflation peak narrative, it just boggles my mind. So
do you think we get a 9 Right. I think the last print was 8.6. Do you think either what will be the June number or the July number actually has a 9 on it?
I think so. I mean, eight
Oh,
six is just silly.
it's a
They've
whisper. Yeah.
suppressed the data to keep it at that level. Um, I mean,
Yeah.
housing is starting to correct a little bit. Vehicles may be correcting a little bit, but you might see a little bit of an adjustment there. But food, energy, those types of things, it's not
Yeah.
coming down. And the cost of everything else, because of those reasons,
Yep.
is continuing to rise. And housing's correcting. That's coming down. Maybe that's the next video. We'll talk about real estate a little bit, but the real stuff that you and I need to wake up and live every day, it's not coming down, and I don't think it's going to peak anytime soon. And the Fed's they gotta take action. They got to say, what, markets need to correct. We need to reset, and if things got to go back down, to pre-pandemic levels, that's the first stop. And one of my theories and thesis is, if you take all of the leverage and liquidity out of the system, we could potentially revisit where we were pre-2009 crash. Because
wow,
that's where QE started. That's where zero interest rates started. So ask your Wall Street guy that, because I did a video earlier today where I said, if you take all of the liquidity and leverage out of the system and you let rates adjust to nominal levels, that's 2009 before the crash.
I'm going to look that up. I'll have that ready.
And all this forward earnings and PE ratios and all that, they're all based on interest rate, right? That's a valuation when rates are, have been nominally at zero, that we've seen these exponential growths in forward earnings and things. And companies are earning more because we have more people and people are spending more. But if things really, deflate, and that's what stagflation is so worrisome to people, if you really get that kind of, lack of growth in consumer spending due to inflation and the damage, to people's spending ability, the question is, can you get back to those pre-2009 levels where markets were peaking then, much less pre-pandemic levels, where markets were at all-time highs, that everybody was like, this is crazy, So anyways, those are the two targets I'm looking at. I'm not saying that it will happen or it could happen. I'm just saying it's kind of interesting, to contemplate, could you get back to those levels? Because that's where we were after some, good run up before that 2009 crash. Markets were peaked back then.
Yeah, we have a lot more pain ahead of us. The Fed has to induce it. They have to create it. There will be a negative wealth effect. It will be painful. There'll be babies thrown out with bathwater. But again, all of this is leading up to get your shopping list ready. There will be amazing companies sold at significant discounts. I keep telling folks, this is when wealth is built. Understand the headlines, appreciate them, but take action. Be prepared. Do the work. Build a shopping list. It's all the stuff we've been talking about forever. And again, you built your career by being a contrarian. So don't be afraid. Understand, appreciate, prepare if you can. But yeah, I think there's some great deals ahead of us.
Yeah, there's always opportunity. And here's the thing. So I'm not going to say which ones, because I'm not going to guide anybody or lead anybody. What I will tell you is we're not at the bottom yet.
Yep.
There were a couple of people that are calling for melt ups and new all-time highs and just, silly nonsense that you just it's just not even rational to have that discussion right now. But I've bought some stuff that's down 50, 60%. So there's been individual stocks have been taking 40, 50, 60% hits. So I'll go in and I'll buy those and I'll sell them when they rip, because they always bounce at some point. So I've been making a couple of those moves. I have nothing long-term right now, because this is all trying to be long-term.
It's all trades.
Yeah.
Yeah, that's a big thing. The big thing I learned after losing 80% of my stack back in the day is you have to understand, are you an investor, a trader, or a speculator? Know who you are. And most importantly, don't be one and act like the other, because that's where you get really hurt.
And this is the lesson I learned from 08 and 09, because back before that happened, I didn't think real estate markets could do what they did. I didn't think banks could do what they did. And, we saw banks collapse. We saw companies collapse. We saw real estate collapse. We saw the government come in and prop all that up. This time, what I'm looking at is that they can't do that. And there's central banks around the world right now that are at risk, because this is a global thing. So there's already central banks. There's, rumors out there that the Bank of Japan, I think, is cracking. So we've got some systemic risk, because, these guys are all interconnected. So, I mean, if you have a global deleveraging event like that and everybody has to reset, that's where I'm saying you could see pre-2009 levels. So I don't want to be in anything, because, will it come back, maybe, but how
Maybe.
long is that going to take?
Yeah.
You know, and I mean, I'm not a boomer, but I ain't getting any younger. you
Yeah,
know?
exactly. Every day goes by for you, just like me.
Yeah, I'm
Exactly.
55, man. I don't want to, spend another 20 years waiting for things to come back, So you got to make these moves in and out,
Yeah.
depending on the asset, depending on what you're doing. You can't always rely on things to always and forever go up. And the Fed, they can't come in and do what they did in March. They can't come in and do what they did in 2009. So this is a very different time and a very different environment right now. So you have to think about it differently. You have to be open to different ideas and discussions, and you got to protect yourself and just make, buy the dip, sell the rip, and just hope that you can get that right, because you never know when you buy the dip and it keeps on dipping,
Yeah.
and next thing you know, you buy the dip, you are a dip.
Exactly. This has been a fun conversation, folks. Again, appreciate the pain, appreciate the negativity, but use it to your advantage. Get a shopping list, buy real companies that make real stuff and have real profits. That kind of shopping list will be amazing eventually. Greg, where can people find you?
Yep. GregDickerson.com. That's where all my info is. YouTube channel, podcast. Go check it out.
Awesome. Thanks, buddy.